Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's keep going with the gold market. As usual, daily review. So today we will discuss only technical picture. No big news. Yes, a lot of political events, negotiations with the Russia, some action around Epstein list and so on. But all the stuff still stands in some beginning stage. So we do not know what results will be. We need just to wait a bit. Market just trying to absorb different rumors and just priced in there and increasing the volatility. But in the current moment, I wouldn't say that it generates some great ideas for trading. So on a daily chart, you could see that market stands mostly indecision for a fourth actually session in a row. You can see it stands in the tight range as we shown it in the 4-hour time frame chart. This some kind of the upper channel or flag consolidation. Potentially it might be bullish, but still I think that we could get more chance to take the position. In general, on the daily chart, if you could see, it's a good sign that market is broken above this trend line once again. So it's dropped out, then thanks to payrolls, return right back up, and since it stands then in this tight range, although we do not have any good upper continuation, but in the longer term, as we already mentioned it, week by week, we have the bullish context, because this big performance presents the big pennant on the weekly chart, and every time when the pennant forms around the top, it's just coming upper breakout. So maybe it will stand here for 1-2 weeks more, we will see. But overall combination here with this bullish dynamic pressure has a good chance to show the upper breakout. So if you trade on the high time frame charts, on weekly in particular, the pennant is an area where you could accumulate the positions by minor small fractions, by the minor chunks, but week by week just accumulating, preparing for breakout. For the daily traders and for position taking that we discussed yesterday, I think that maybe we could get better chance, or as I said, that's maybe we'll get the levels that we discussed yesterday and actually day before. So here market still could show a bit deeper retracement. Why I think so, it's mostly based on the intraday charts. I'm not sure that we should worry about this grabber, because this market has not triggered it with these big spikes, and actually I wouldn't worry about this too much. We will see. Besides, here was, as we said, relatively high close compared to it, so it nominally exists, but the performance that I see here hardly corresponds to the idea of this reversal pattern. So we will see. Now I would more interested with the retracement that could happen. So on the 4 time frame chart, you could see what's going on. Obviously market has lack of the drivers and looks a bit heavy. Any attempt of the upper breakout failed, because this spike dropped down, so once again dropped down. But at the same time, buyers do not let market to drop too far. Any more or less significant retracement immediately buying out by the new traders are stepping in. So from that standpoint of view, we could consider some lower levels for retracement, for position taking, but they also should be not too deep. For example, on the hourly chart, what we have, recent performance has nice local butterfly shape, pullback stance relatively strong, and you can see that here is a kind of the engulfing pattern is forming. Yes, this candle is not closed yet. We do not know for now whether we definitely will get it or not, but for now it looks really nice. And I would say this some kind was stop grabbing action. So market just jumped up. This recent upward action probably it's triggered by the stop orders here. Once stops have been grabbed, market collapsed down. Since it stands right here and makes no attempt to return it back up, it means that that might be deep retracement. Here we apply the way how we usually estimating the ultimate targets for butterflies. You know, the ultimate target is the extensions of the whole butterfly swing to the opposite direction, because butterflies are reversal patterns. Yes, minimum targets is the 30% retracement, but ultimate targets are 127, 1618 to the downside. both stands in a great and accurate agreement with the support levels that we have already talked about. It's 33.35 and 33.48, approximately 33.50. So if this indeed happen and market will keep going lower and there's a bit deeper retracement, which is possible based on this performance, how it performs here with this spike up, some kind of the graveyard doji shooting star doji is forming. It suggests maybe slightly deeper retracement, so I wouldn't be surprised if we will get at least 127 extension and market once again will touch the lower border of this flag consolidation. So we will see, but for now I wouldn't hurry up with the position taken on the gold market, so maybe retracement down might be a bit more extended. So that's our current view on the gold market. Let's keep watching and see what will happen.